I want to talk about 5 stocks to buy in September 2019. And normally when I do this sort of video, I do the 3 stocks to buy in whatever month is coming up. But this month I've decided to do 5 because there's 5 stocks that I'm generally looking at buying. And I thought it would be unfair to leave the other 2 out when I am considering them. And I like to be transparent and tell you what I'm kind of thinking about regarding the stock market and moves I might make. So I thought I'd include them, and like I normally do, I'll just spend about 2 minutes, 3 minutes on each stock and saying a few reasons why I like the stock and why I'm considering it in September and buying some shares in them stocks. And a few stocks I currently have already in my portfolio. I'm just talking about maybe adding a few shares in. And some are stocks that I currently have no shares in, and I'm currently looking at opening a position up in them companies and buy some shares in them. Now, as always, guys, it is kind of a long-term view, so I'm kind of looking towards 1 to 5 years is where I'm going to hold them. And if you want more details on the stock and kind of my opinion on the stocks for a little bit longer than 2 or 3 minutes, I think all the videos I'm going to be talking about, I've kind of done a good deep dive into the company and talk about them a little bit longer. But I'm just gonna hover over them really quickly in this video. But if you want a longer view, go check some of my videos out. I've got a lot of detailed videos about that actual company. So number 1 this month is a stock called Wynn. The full name is Wynn Resorts, and Wynn Resorts is down quite a bit at the moment. And in fact, it's a company that I probably should have really invested in last week when it was down towards nearly the $100 range. But it got hurt because of China trade war news, and it's kind of bounced back really since. And Wynn Resorts is a company that I used to previously own. It's a stock that has great revenue growth, great brand, great EPS growth, great dividend. It's got so many things going for it, and its EPS is kind of slowing down recently. But that's only because it's opened a new resort in Boston, and the new resort in Boston should pay off for Wynn. I actually made a really detailed video about Wynn a few days ago. And with Wynn, it looks like it's going to probably open a few more resorts somewhere else. It's also got its Macau, which is why the China trade war kind of affects it. It's got its Macau resort, which has a lot of revenue come from there, and they're also looking to expand it. And one of the reasons why the stock also bounced off its last lows was because some news came out that the actual gambling in Macau was up more than what they were kind of thinking it was going to be, and that's what got Wynn moving upwards off its kind of $100 range and back into the 110 range. So overall, I really like Wynn. The only thing that really puts me off with Wynn is that it kind of can be affected quite a bit by the economy, and if there's a recession or anything like that, that could really affect Wynn numbers. But it's really hard to think about that because you can always say there's going to be a recession. In fact, I think for the last kind of 2 years, everyone's been saying there's 2018 and 2019, everyone's kind of been saying that we're due a recession and the recession is going to come, and every time there's a little bit of a dip, everyone goes, oh, the recession's here. And it's kind of something that you can't really plan for, because what happens if there's not a recession for another 3 years? It's not something you can really be that scared of. So I'm kind of considering it, but it's not a big factor. So Wynn's one that I'm definitely watching really close, and I wouldn't be surprised if I do pick up some shares in Wynn going forward. So number 2 is a stock that I kind of nearly talk about nearly every month on this video, and it's Visa. And Visa is a payment company that has just done so well. And the thing with Visa is, the reason why I've never added shares into Visa recently is because it's just been on such an uptrend, and I like to buy things on discount. And with Visa not really having that many discounts, I've not really bought any. And I'm still hoping for a 10% pullback in Visa at some point, and hopefully it will happen. It's just such a strong company. It's got nice dividend growth. It's got EPS growth, revenue growth. Obviously, card payments are going to carry on going up. It's just a really simple company that everyone can kind of get the grasp of Visa. And if you want to buy Visa within an hour and you just look at the company, it's just so strong everywhere, and it's just a great company overall. And it's why I like it to be my second biggest position in my portfolio. And it's kind of been dropping down a bit recently because I've not really bought any of Visa, and I kind of want to make it Microsoft's my biggest position and Visa a clear second biggest position in my portfolio. And it's kind of dropping quite close to the third, fourth, and fifth stock in my portfolio right now, and I don't want that to happen. So Visa is a stock that I definitely want to be adding at some point. It's just when the right dip comes in Visa, then I'll definitely be buying the stock, and hopefully that's something like a 10% dip that I'm kind of really looking for. Number 3 is Align stock, which is a stock that I only bought about a month ago, and I made a big full detailed video about Align stock, but it's a stock once again on a major discount because of some earnings that kind of brought the stock down, and it's kind of also had a big massive dip, and then it's been on a little bit of a downtrend since. I mean, I basically got into Align stock around the $200 mark. I think it was 210, and since then now we're down to about $170, $180. So it's gone down like another 10% since I invested in the stock. And if this, like I said when I invested in the stock, if this stock does go down, then I'll be tempted to add more shares into it. And that's kind of happening right now, but it's not gone down enough yet for me to buy some more shares. I'd kind of be looking more towards the 160-ish range before I add any more Align. So I'm kind of not fussed if it goes up or down from here. Preferably, I probably want it to go down because that's where I want to buy more. And it's a company I really like because of the growth, all the patterns it has, and it's the clear market leader in its sector as well. It's also got such a clean balance sheet as well, and it's a great company. It's a great company that I would actually consider like making it one of my top 3 biggest positions because of how good it is. And I just think it's a stock that has come from $400 a share down to here so quickly. I agree that it was a very overpriced company at $400, and it's now starting to get to a fair value company in my opinion. But when you look at the growth still, like it's definitely a company that's not going to stay at these prices for too long, because if that growth carries on going up, then the stock price will follow it at some point as well. So a stock that I'm definitely watching in case it goes down more, because it's a company I would not mind buying a few more shares in, to be honest with you. My 4th stock is Alibaba, and added Alibaba back to this list. I was kind of happy with the positions I had in JD.com and Alibaba as well. Like my China exposure I was very happy with, but after the earnings from JD.com and Alibaba, I was kind of like really impressed with them, and they were really strong, better than what I could hope for. And I think that Alibaba right now is massively undervalued right now, and looking at the stock right now, I see a good 30 to 40% upside in the company, which is a great return on the company, and I think it will get there at some point. It's a very diverse company, and with these earnings as well, it kind of makes me feel confident about how undervalued this stock is right now. And I think if the stock kind of stays around these prices, I'd ideally want to get in around the $160 mark, which I could have done before earnings, annoying enough. But I was kind of happy with my position then. But now with these earnings, I'm like, maybe I'll add a few more into Alibaba because the earnings were really good, and I just see so much upside in this company. And when I talk about upside and risk to reward, this is when I say like I like a company, but I see limited upside. Like I can see a 10 to 20% gain when I can see big ones elsewhere. And this is what I mean about, when I look at Alibaba stock, I see so much more upside than the 20% upside. So it's a company with just so strong revenue growth from here, EPS growth. I've talked about it so much on the channel, so I don't want to spend too long on it, but it's definitely a company that I'm considering adding a few more shares in, and probably $160 is probably where I'd look to get into Alibaba if I can, if some more like negative China trade war news does come out. And my last stock is Facebook, and it's another one of those companies that I was really happy, very much like Alibaba, I was very much happy with the position I had in Facebook. But then it came out and it reported some numbers, and the numbers were absolutely amazing. The stock hardly moved up, and I think that was due to just how much it's gone up already this year. But now Facebook's towards the $180 range again. It's a stock that I definitely feel should be a $200 stock, and it's a stock that I probably see as a $250 stock, really, to be honest with you. And it's such an easy model, such good, gross margins, great platform, best advertising platform out there. It's an easy money stock. It's such a simple company that will carry on making more and more money as it goes on, and it keeps on expanding. And I just really like Facebook as a company. Obviously, it does have its problems with a few of the legal actions it has taken against it, and that does happen with a company like Facebook. But it's got hardly any debt on its balance sheet, and it's a company that if it gets fines, it doesn't really matter because it's got the money to pay it. and it's just a really strong company. And probably, in my opinion, I would probably say one of the best 5 stocks that you could invest in on the stock market right now if you're a beginner or any sort of investor. It's a stock that I would say that everyone in their stock portfolio should have, because I think it's just really easy money invested into Facebook. So yeah, Facebook is, after the earnings, you know, is a stock that I'm definitely looking at adding some shares in. So those are the 5 stocks for September 2019, guys. I'm looking at buying shares in. Like always, if I do buy any stocks, I'll make a video about it and share the price that I got in at, and let you know if I have bought them shares or any positions into the stock. I'll always let you know. You know, I always like to be really transparent on the channel. So thank you for watching. If you could give the video a like, subscribe, that would be amazing. And I'll see you on the next video.